I think we can start. For those who have come, so we can ensure that we keep up with time and give enough time for Q&A at the end. I don't know what we think.
Works with us.
Works for you.
Yeah.
That's fantastic. Sorry, I had to go I was looking for coffee somewhere here and I'm not seeing it, but hopefully someone is going to bring it.
Come. We got you.
Well done. Well done. So I'll just start the meeting very quickly. I'd like to thank the entire membership for coming today. And then those who are still joining, a few people have sent messages they are joining. Why are we here today? Well, Emata seems to provide an interesting solution for all of us. But I'll just summarize it like this. As coffee people and as coffee traders, sometimes when we do our businesses, we try to do everything. We try to be the ones who are doing transport. We try to be the ones who are doing the roasting. We try to be the ones doing the procurement. We try to do everything. Including all these things, we also try to do coffee financing for our farmers. Sometimes it works, but most times it doesn't. And because of this, we sometimes get maybe extreme staffing issues or financing challenges or failure to recoup the information, the money. But one of the core reasons is because it's not our core business. As coffee traders, our core business is trading. And as the world becomes more specialized, there are people who are coming to provide us with solutions that help towards this end. So Emata is also a member of UCF, fortunately. Their name is Emata, not Ekawa. They will explain to us why they are milk and not coffee. That's another discussion. But having met Bram and met Maren, and having been with them at Coffee Day and had long conversations, we said maybe we should have this conversation with our membership, let the membership know what's happening out there, but also let the membership know who else they are working with and what other people's experiences have been. So the core purpose of today is to listen to someone who's providing a solution that we all need. We all work with farmers, we all source from them and help to de-risk our businesses and allow the people that are good at one thing to do it and allow us to do our thing very well. The trading environment is very volatile, and that is nightmare enough. Let us focus on what gives us headache and let someone else focus on another type of headache. So over to you, Bram. Just wait. Today we will have Bram is the CEO of and co-founder of Emata. He will be speaking to us, but also Lillian, who was very much with me at Coffee Day in Kasese at AgriVolve. Lillian Musoke is the CPO and co-founder of Emata. So they will tell us about what Emata is doing, show us who they are working with, give us a bit of their history, and then allow for us to engage and ask all manners of questions. For example, what is the interest rate? How do you plug into my existing system? And so forth and so forth. Yes, over to you, Lillian and Bram. Thank you very much. I've also come with my paper. I'm going to take notes as well. Thank you. And I'll be moderating the session. Thank you.
Thank you, Martin, and good morning, everybody. Martin, I've taken your suggestion on Ikawa. Maybe we should call it e-cappuccino, but we shall have our communications team have the final say on that. Yeah, good morning, everybody. That was a wonderful introduction. But indeed, spoiler alert, we are essentially here to take a big headache away from you. The headache of the almost necessary evil to give loans to your farmers to make sure that they actually sell all the coffee that they promised to sell to you. Essentially, for coffee companies out there, whether you're a cooperative or an exporter or an aggregator, we are your in-house bank solution in dealing with your farmers. This is what we're doing. This is why we started the company. and we shall explain to you why and how this works, and hopefully how you can benefit. Starting with the benefit. So the numbers that we're seeing are quite impressive, that the moment we start partnering with the company that is in coffee, but also in other value chains where we're active, we tend to see volumes of those farmers that get a loan go up by about 80%. 80% is quite a big number, and obviously that is not the effect of a bag of fertilizer. Yes, there is a productivity impact in there that's anywhere between 20 and 40% is what we're gauging. But the biggest thing that we are solving with our loan product is side selling, which of course is a topic that, yeah, we all are a bit too familiar with. But essentially, we are one of your best bets to get rid of side selling, and working with us essentially will drive up your volumes quite spectacularly. We have been doing this for over 4 years all across the country. 67 agri-businesses already partner with us. Collectively, they have actually over 100,000 farmers, but this is across a lot of value chains. Coffee and dairy are very important to us, but we also work, and I must say, have learned things from oilseeds, maize, cocoa, horticulture, and potatoes. So as we stated earlier on, we are your in-house bank, and we are the in-house bank for your farmers. But thankfully, we are not a bank. We do not behave like a bank. We don't think like bankers. We think like people who like to make you happy, as opposed to, well, whatever. I'm not sure if they're bankers on the call. Whatever banks that try to make you feel. So sadly, Uganda is sometimes a place of promises that are broken. And I'm sure that many of you have had discussions with banks where they would say they would come and lend to your farmers. But of course, the reality is that typically either they don't show up or the loans eventually come, but after months. Many farmers think they will get a loan, but then they end up not getting a loan. They still want you kind of to come to a bank branch, and then contrary to what sometimes they're promising, they actually do not like to give small loans, right? They prefer to give loans, well, ideally above 10 million Ugandan shillings, which we think is really, really dangerous for most of those farmers out there. If you partner with us, what we promise you is that farmers will actually only need to spend 5 minutes on the loan process. The farmers will get the loan the moment we say the loan will come. The loan will come. They don't need to travel, and our loans start as small as 100,000 shillings, so that even the smallest farmer can actually get a loan. Now, why are we so keen on saying that we're not a bank? Well, because at heart, we are a technology company. I am the odd one out here. I actually used to work for a bank, for many banks actually. But if you walk into our company, you will find mainly software engineers and data scientists, because at heart, we are a technology company, meaning we like to solve problems and we like to solve them with technology, allowing us to be very fast and very efficient. Secondly, we think data science is the answer to whether a farmer should get a loan, not collateral. I do not know why people still insist on collateral. I think everybody now knows that farmers do not have the collateral that banks are looking for. And we have proven ourselves that actually with the right data, you do not need collateral. The data science will tell you whether the farmer is a good farmer or is a bad farmer. Number 3, we have been built by partnerships from day one. These are partnerships with a lot of coffee companies, and we've seen some of our partners here actually on the call, which of course is super important. There is not always a super good partnership culture in this part of the world, but we have made it the centerpiece of how we built this company. We only work with farmers that actually are affiliated to a coffee company, but again, whether you're an exporter or a cooperative or an aggregator, that's all fine. And lastly, yeah, we like to say that we think like farmers. We spend a lot of time in the field, and we don't think like bankers that give a loan and then ask a farmer to pay back with monthly or quarterly installments, even though there is no coffee harvest in that month or in that quarter, which of course does not make any sense. Now, I'm going to repeat this because it's that important. So why should you partner with us? Why should you consider working with us? Well, that is because you are facing side selling issues. Right? Most of your farmers, regardless of all the work that you do for them in terms of certification, in terms of paying premiums, in terms of agronomy services, in terms of access to inputs, they still end up selling a lot of the coffee or cocoa to other people than you. And in most of the cases, probably in a majority of the cases, the difference between selling to you or selling to that informal trader is a loan. A loan is the reason why the farmer ends up selling to somebody else, because they have an immediate problem that they need to solve. And yes, they would like to sell to you, but they simply have that problem. And yeah, the rule of the game is simple. Whoever gives the farmer the loan has the biggest chance of securing that harvest. So yeah, that is the sad reality of what we know you are facing and what we help you solve. Essentially, our loans are a means of getting loyalty from your farmers, and they are a way to increase your volumes. Why loyalty? Because our loans are very simple. The more a farmer delivers to you, the better the loan offer will be from us. This is a message that we repeat over and over again across anything that we do, and farmers really get it. Literally, we have farmers who start selling way more to you once they've gotten a loan, and we have farmers who really want to get a loan, and then as a result of that, already start selling way more to you. So essentially, we're like your loyalty program, frequent flyer card, whatever have you. And as a consequence, we make sure you get much higher volumes. 80% is the number that we tend to see across the board, but we have seen numbers even higher, which obviously is super, super important, because most of you run a certain infrastructure, whether that's storage, whether that's a factory, whether that's trucks. And of course, the higher the volume, the more money you can earn on those fixed asset investments that you have made. Now, this all sounds lovely, but how does it work in practice? Well, that's why we have Lillian here, who's going to explain to you exactly how this actually works.
Yes, so how does this work in practice? This is a question that Martin posed earlier, that, okay, how do we plug in into your existing systems? One of the things we do for our partners is that we digitize and clean all farmers' historical data. What does that mean for you? Is that you're able to get an insight into how your farmers have been performing over time. And for us, with this partnership, we agree to use this data to create the credit limits that these farmers need to get a loan. Every farmer gets a tailored credit limit that is specific to how they've been performing over the years. So we create these limits and combine it with weather data to make sure that the limits are, that the farmers are able to get loans that will help them in their productivity, but also are easy for them to pay back. We also use these limits to give digital loans to farmers. These loans are given through our WhatsApp chatbot. The best part about our loans is that the limits come pre-approved, which means farmers will get the loan when they need it. It is not a process that is difficult, but in a matter of minutes, farmers get their loans by just going to their provider, who is an agent at our partners. These agents are trained by us to go through the system and understand how to request for loans on behalf of the farmers, and the farmers then get the loan on mobile money, on their phones through mobile money. At the point of getting a loan, farmers can get loans through cash or inputs, or even a bit of a mix of both, depending on what our partners need. We have created a model that works for all kinds of partners. So we have partners that are less sophisticated and are just willing for us to take on all the different activities, including deploying our own capital to lend out to farmers, creating the loan terms and rates, including the limits. For these loans, our loans are seasonal, and they take on up to 3 to 9 months in terms of how long the loan takes. The loan will then be repaid at harvest time, as Bram mentioned earlier, that farmers would need to just take the loan, and at the point of harvest or delivery, a repayment is made and the deduction is made of their loan balance until the loan is paid fully. We then also make sure that their performance in every season is also something that we take on to the coming season, so that the farmer is growing in their finances and their limits every season that they work with us. Another model we have is a hybrid model where partners want to deploy their own capital. They have all the funding, but want us to run all the credit scoring, all the lending operations, and be able to lend to their farmers at ease. Yeah. For bigger companies that have bigger capital, they deploy their capital and determine their loan terms. However, we still run all the credit scoring, all the tech, and the lending operations for them. So these are the different models that we've been working with our different partners, depending on their sophistication and size. In addition to that, we have learned over the years that our partners are facing a huge risk when it comes to security and efficiency in how they pay the farmers for their product, for the products they deliver to them. Farmers tend to like cash, but there's a huge risk in that the money that the farmers deserve to get paid for the coffee does not actually get to them because of the cash cycle. So most of the time, fraud is involved, and sometimes farmers don't get their money's worth. So we've developed a solution inside our crop MIS that digitizes these records, that partners are actually, with the push of a button, are able to pay their farmers for all the deliveries made, for premiums, for any bonuses that the farmers are due to them. So farmers get all the money that they are required to, that they deserve to get without any middleman. As a safety net, in addition, we also give crop insurance. This insurance is basically tailored to enable farmers have a bit of a cushion in case of any extreme weather or climate conditions that would affect their yield. So we've seen this benefit most of our partners, in that farmers, even after a very devastating season where they lost almost all their crop, are able not just to pay back their loan, but also receive some money to help them with their livelihood. So we have seen that this has been more, since our pilot last year, this has been received increasingly, and more partners are requesting for us to have all their farmers insured with our new hybrid insurance. Yes, these are some of the examples of farmers that have received their crop insurance payout and are happy and more confident to have their coming seasons insured with us and in partnership with the Agri-Insurance Consortium. Yes.
All right. Before we go to the interactive part of this session, let us briefly wrap up. So what we can help you do is to grow your volumes, whether coffee or cocoa, through our products of loans, insurance, and payments, all targeted towards your farmers. Our loans essentially are a loyalty tool that help you reduce side selling. The crop insurance, as Lillian explained, actually reduces risks of the loan and stabilizes the farmer's income, because not all seasons are equal. And digital payments is something that we do to make sure that farmers actually get paid the full price that they are entitled to, and that you finally can get rid of these massive headaches that cash is causing you. And all of these products, how we operate as a company, is all meant to make sure that you can grow your source for volumes from your farmers and can get more coffee or more cocoa through your infrastructure and through your products or export business. As Martin alluded to in the introduction, we all have our specialty, and for us, this is our specialty. Lillian and myself have a background in building digital banks. We have built digital banks for others, and we have built this digital bank for Uganda and for Ugandan farmers and for Ugandan agri companies. And getting financial services to farmers is what we do. That is our bread and butter. We have spent over 4 years making many mistakes. So hopefully we have been able to eliminate the vast majority of them. We have a full in-house tech suite to do all the things we just mentioned to you. We have tools to collect data in case people do not have their own data collection tools. We have a team and many, many algorithms to help with credit scoring. We have our own loan distribution system using WhatsApp. We have our own loan approval system, and we have our own digital payments platform that we use. We are there on the ground. We're not only based in Uganda, we even have offices up country, and we have people on the ground that come and train your team and your farmers as to how this works and what people need to know. And last but not least, we are a company built on partnerships. We partner every day with a lot of different agri companies across the country, and we know what it takes to bring a partnership from an initial stage to over time, iterating and iterating, to slowly but surely make things work better and hopefully one day achieve perfection. Martin, we shall leave it with this for now. Back to you.
Thank you very much, Bram, and thank you very much, Lillian. I have a few questions, but we've spoken a lot about them. Maybe if I could invite Jerry Roland, if he could share his experience working with you guys. I don't know if he's I saw he's on the call. I don't know if he's still there. Is Jerry Roland on the Agri-Revolve? Is Agri-Revolve there? Before we go into them.
Johnny.
Yes, Johnny,
not
how are you?
But
Thank you, Johnny.
How are you?
Fine, thank you. Yes. What has been your experience? You know, this all looks very nice and fancy, and I think it's a good solution. But what's been your experience working with Emata? Maybe for the people in the audience, the people who are listening in to listen to, then we go into the next steps.
Yeah, so briefly, we started working with Emata in 2022, so we've been going for about 2 years now. And we've, in that time, given loans to over 600 farmers. And, I think Emata would be the first to they won't try and tell you that this is easy. It's not easy. I think everybody in coffee is realistic about this. It is a massive issue. I think, personally, I think financing farmers is probably the biggest barrier the coffee industry has in terms of its development. There's a lot of money in coffee, as we know. A lot of it moves around at much higher levels than the farmer. And so there's certainly in some cases, particularly in Arabica, I think less so in Robusta, a lack of investment by coffee farmers. I think in Robusta, particularly Nassanga, that's obviously over time improved. But financing is a massive challenge, and Marty touched on it. We all know that loyalty in coffee, I wouldn't say non-existent, but it's lacking, and to be honest, that has its advantages, disadvantages. Farmers should be able to sell to the best options that are available on any given day. But I think we all know that a lot of coffee is sold well under the value that it could be sold at, because it's attached to some financing from a money lender or someone who has put money against that coffee. I know they call it mortgaging in the field. And I personally think that's one of the biggest barriers to quality improvements in Uganda's coffee, because once a farmer is effectively not giving away his coffee, but once the coffee is sold at a very cheap price to pay off a very expensive loan and effectively mortgaged, in my opinion, the farmer loses incentive to do anything about quality, so he's no longer incentivized about the harvest or processing. And then you've got a problem that whoever gave the loan wants that coffee as fast as possible. And I think it's the number one driver behind early picking of coffee, basically unripe, picking underripe coffee, which, as we know, is a big problem for coffee quality, particularly in Arabica. So we set out to try and address some of these challenges with Emata. We like the fact that Emata focus purely on agriculture. Obviously, there's a lot of loan companies out there, as Bram said, banks. Several banks have come. In fact, all the banks have been to visit us to try and show us their solutions. None of them have worked at farmer level because the paperwork the paperwork requirements are just simply too difficult for any farmer to comply with. So, initially when we started, I think what we were most impressed with was the speed at which it happened. The initial onboarding, so the first launch that we did, we looked at a small number of eligible farmers. We only targeted, I think, less than 100 farmers in the first season. And what was amazing, I think, from both the farmers and us was after some training of our staff and then awareness to the farmers, farmers received loans the same day. That it started, and they were amazed at the ease of the process. It's all done through sort of a WhatsApp system, which I don't know much about. Lillian can interrupt me if I say something that is not quite correct, but it's all done in a very simple and easy way that anybody can manage. And so the speed of the loans and the ease of the loans impressed us and the farmers. And we started small, and I think that's important, right? This system can only work for you if you have good data and good traceable data of your purchases. There's no point giving Emata a load of fake farmer data and fake purchases, because you will end up with a lot of loans going to people who never delivered you coffee. So you have to have good data. And we know data is an issue in coffee. So I think start small, which, we did start small. And I think the whole process of giving loans to farmers, paying farmers digitally, which we're trying to also do, and it drives you to improve the quality of data and price transparency all the way from farmer to the farmer, which I think is very important. And I think buyers around the world see it as being very important. And I think it's important for improving quality in the value chains as well. So over the seasons, we've done, I think, 4 or 5 seasons now. It's grown every year. We've done more and more farmers. Yes, there's been challenges. Yes, it's not easy. But overall, we've been very impressed with Emata, their team, their innovations. It's certainly different to anything else you'll have experienced with any bank or other microfinance organization, simply because these guys are focused only on farmers. And no, they haven't paid me to say that. It's genuinely the truth. And I do think it is the biggest challenge in coffee. So yeah, I would highly recommend that anybody gives it a go and starts small. And so long as you focus on good quality data, I think in principle it works very well. And we've certainly seen an improvement in loyalty in the areas where it's working well. We've been able to distribute bonuses digitally to farmers as well. It's brought a lot of advantages that I think over time will really help our sourcing in the field.
Thanks for that. Gives us some perspective. But you mentioned a part that you need to also sort of have your in-house systems a bit organized. I don't know if Bram and the Emata team sort of also help you get there. You said that you do. My 2 questions are, before we maybe open up, do you provide options for people who have their own capital and like to bring it in, and for you to outward lend, or is it strictly for those without? Then number 2, next question is, what has been your experience? Of course, now for comparison purposes, what is the difference between the other sectors and coffee? Coffee people, we like to feel slightly special, because we are always in the newspapers, we always make front cover. But maybe just to give a bit of context of the difference, because you're also in there, just to give a bit of context between the two sectors. Thank you. Then I think we can open the floor for some discussions. People are sending me private messages. They want to ask a few questions. Thank you.
All right, let me start on these 2 questions. Yeah, we're really flexible in many ways, including in the capital that comes for these loans. So we have our own MFI license, we have our own fund from which we lend. So we say we're going to come and lend, we will come and lend because we have the capital needed to do it. Having said that, there are a few coffee companies out there in this country and in general that have such big balance sheets that they said, listen, we really like what you do, we like your expertise, but we do not need your capital. In fact, we have capital, whether it came from their roasters or whether it came from certain donors, that we want to put to work. So we also offer that solution. It comes a little bit with different terms and conditions. So if we lend out our money, obviously we're a little bit stricter in the type of loans that we do, and we are the ones setting the terms and conditions, obviously in consultation with you. We'll give you a menu. If you want us to lend out your capital, of course, you can dictate the terms and conditions. We will advise you. We will tell you what we think is the right thing to do based on our experience with financing thousands and thousands of farmers. But you have more leeway to decide what the type of loan product will be and what the pricing will be on that loan product. And spoiler alert, typically when people come with their own capital, it allows them to price the loan lower because ultimately they don't care so much about the economics of the loan. They care much more about the coffee that comes with them. In terms of the second question, Lillian?
Yes. Do we help our partners get ready? The short answer is yes. For partners that are less sophisticated, do not have any system or digitized data, we actually have walked into offices of some partners with rooms and books of data that they've actually just written down on farmers' deliveries. We take those, we digitize them, we give them a system that helps them keep track of their farmer activities, and that's the information that we use now for credit scoring. The advantage is we do not pressure the partner to start digitizing all the years of data they have in books, but rather we pick up all the historical data and digitize it ourselves. And then we clean that data, give you insights on how that information how farmers have been performing over the years and some of the anomalies. And that's the data we eventually use for credit scoring. So yes, we actually do help partners of every size, of every kind of technology experience to actually get on board and be able to work with them to give their farmers loans using their existing data systems.
Yep. And I think, Martin, that's probably, if we compare coffee to other value chains, what makes coffee special is that actually most coffee companies have a data system already.
Yes.
Whereas in other value chains, trust me, even when they buy from maybe 5,000 farmers, if we are lucky, we find Excel sheets. So most coffee companies have a digital system. We believe that is a reflection of how professional the coffee companies are compared to some of the other value chains. And of course, the importance of certification in the coffee and cocoa industry. So that's definitely one difference. The other difference is that in coffee, we'll find partners of all sizes. So yes, there are your smaller-ish partners who work with a couple of hundred farmers, which is very common what we see in milk. But of course, there are also a caliber of coffee companies, right? The big multinationals, Agri-Evolve is not small either, that work and operate at a scale that you almost do not see in other value chains, right? People buying from 10,000, 20,000, or even more farmers. Yeah, that's purely coffee. So yeah, the coffee value chain from our perspective is definitely one of the more professional, one of the more organized, and one of the value chains with larger and more sophisticated partners. And of course, right, I've heard people complain that coffee isn't organized and farmers are misbehaving. So you can imagine what we have learned in other value chains where, trust me, things are even worse.
Okay, thank you very much for that. Before I open the floor, Marion, I think I can't see who's there, but you can see who's in the room. My last question, which has escaped me, suddenly it has escaped me. Oh, yes, in terms of information and data, and then you can answer this one all with all the rest of the questions. You said does your system allow you to understand what the farmers who you're lending the money to use the money for, because that also gives a guidance on how to provide further interventions. Is it only for school fees, or is it for agro inputs, or is it? So how does this system help you understand generally? But also AgriEvolve, he said they are big, but he said, I think they lent to 600 farmers. So that's not so big. So that seems to show that even a small startup and coffee exporter and cooperative can get into the game. But maybe we can open the floor for some questions. I don't know, will people write the questions in the chat? Will people answer them? I can't see. Yes, David Cheswa has a question. I can see one question there.
Let me
Yes, you
put
can
on his
unmute them.
mic. Let me see. Allow. There we go.
Hear me? Hello.
Yes, we can hear
Yes.
you.
All right. Thank you so much.
You say your name, and where you come from, the company. Thank you.
My name is Luzinda David. I am the Sales and Marketing Director for Kamama Estates Limited. We are located in Masaka, and at the moment we have we have 120 acres. We are a single estate farm, and we also do poultry and dairy. So with that said, I have a number of questions, maybe around 5. Number one, for companies like us who are literally estates and we are dealing with quite a big chunk of land and coffee that we produce, we don't have people who like small scale farmers. We don't have that registration process and a system that allows us to, because we are still developing ourselves as well. So does Emata, do we still qualify for these loans? Because ideally, before, we help other people, we have to help ourselves, because we are still like, people still depend on us, because we employ around 150 people around the area. We have given out seedlings. So we do not have yet the infrastructure to, one, register farmers. We do not know how, all those nitty gritties. So will Emata enable us or help us to, register that and, register farmers and help us in terms of that? Number two, when it comes to the finance, now, where does this coffee go? Where is this coffee going? So when we are paying, we pay you in coffee, and give an example. So where does this coffee go? And number three, now, in terms of funding, us as a company, we would love to go into export, and we do not have the ability to, because export needs a lot of money. You need a lot of money, and the cash flow is not there that will enable you to send your coffee and then wait for payment for a very long time. So is that another avenue where Emata can come in and assist in terms of that cash flow, especially with the time value of money that, from the time of delivering the coffee from hulling it to exporting it, that's a lot of time. And like you said, we as farmers, we just sell our coffee just to, we have needs, we have people to pay, we have expenses, etc. So is that a finance area that you guys as Emata can help us with? Number three is in terms of infrastructure. We as a company also, we are trying to, remove the middlemen, ideally support our farmers around our areas by putting in like, a wet mill, a hulling machine, etc. So I ask, is the financing, can it be for literally like infrastructure, whereby we come and we make a plan and say that, what, this is what we have, this is what we want to do. So, can Emata help there? Or is it only for people who have registered their other small farmers? Because we haven't yet registered anything, but we do need the support. So those are my few questions. Thank you so much.
Thank you very much. As we go to the next one, this is what I was saying, Bram, that there is a different size of farmer. You remember how you said in dairy, you have farmers who take loans of 25 million, 50 million in a day. Yeah, now I think that's where I think he's sort of coming from. Maybe, yeah. So also in coffee, we're going to have large scale farmers. So when you say you support farmers, that's now the question. But you'll answer those. Can we take a few more questions? Meryl, are there any more questions? Are there any other people have any other questions?
No raised
Different
hands,
from
but I'm looking
David's?
for them.
Okay.
Maybe while people are thinking, Bram can start answering those ones.
Okay, Bram, you can answer those ones.
Yeah, good. And it touches upon a very important point, right? What is our role as Emata? What are we doing that we think is not there at the moment? And where maybe existing providers, as imperfect as they may be, should hopefully still do the job they're supposed to do. And this is a very classical one indeed, right? Estate farmers who are professional, large-scale farmers versus smallholder farmers. And smallholder farmers, of course, is a very wide term nonetheless. We think that if you really want to borrow large amounts, whatever large may mean, right? But let's indeed say above 25, above 50 million shillings, as imperfect as they may are, you may still be better off with a bank. Ultimately, banks give these larger loans with larger tenors. They tend to be more affordable. As a consequence of that, right, giving out bigger loans is actually much more lucrative than giving out small loans. So there's a big, there's a gray area where we overlap. But from what I'm hearing, indeed, that if you run a large estate, as unnice as maybe these banks sometimes are, you are probably better off trying to go through that scheme. Now, having said that, what we often see is that these big commercial estates build up a certain infrastructure, which is exactly what you said. And indeed, for that infrastructure, I would recommend you talk to a bank. But often to get an extra return on that infrastructure, they set up an outgrower scheme to buy more in the vicinity with farmers that they work with. And that is something where we do have a lot of experience to help with. So we work a lot with large commercial farmers, not to give them the money they need themselves. As mentioned, either they have it or they're good with banks, but to help them run the outgrower scheme. And there we have a lot of experience. So even if we haven't really started yet, I'm sure we can give you some advice or help you get on your way, or even help you do it. Now, where does all this coffee go? Well, obviously, a lot of it is leaving the country for exports, and hopefully some of it is remaining here, so we can drink it ourselves. But needless to say, especially for exports, trade and export financing is super critical. It's a bit of, sorry to say it, but it's a bit of the same story as I just mentioned. It is a different type of financing than we are doing. If you ask me, it's actually the easiest type of financing, export financing. And there are pretty good solutions out there. And of course, they're super important. If you want to run your coffee business at scale. As Johnny is a very good example. He has a lot of trade and export finance lines. We don't touch those, but we do have a network of our own where often we run into companies that we think are very good in providing trade and export finance. And very often we introduce them to some of our partners just to see if they can diversify the lines or increase the lines a little bit, because we do have that network, because we do work with a lot of coffee companies. These trade finance providers tend to like us because we tend to have an opinion on the coffee companies that we work with. So it's not something that we offer. It's also unlikely something that we are going to offer, but we can definitely introduce you to people whose specialty that is.
Hello, my question as well. I don't know if you answered that.
Which one have we missed? The one in the chat here.
No, Martin had a question earlier before Andreas.
Okay, let's answer Andreas first.
Okay, let me read up for Andreas. So Bram and Lillian, first, can we get a numerical example of typical loan value, tenure, cost, and repayment success? Thank you for asking that. It's almost like we paid you to ask it. 2, can the loan be linked to seasonal coffee delivery /payment? Again, I feel like I asked that question. 3, any evidence experience shares which shows loans lead to increased farmer loyalty in season coffee volume delivery? Yes.
Lillian, I give it a crack.
And a typical example, starting with that. Oh, let me take number 2 first. How the loan is linked to seasonal coffee delivery and payments. So our loans are seasonal. They're designed that way that a farmer will get the money they need at the start of the season when they need to make the investment in their farm, or need school fees, or need to kill the time pressure required for cash at that time. And at the point of harvest, when the farmer actually has money, that's when the payment starts. So we do not require the farmer to make a month-on-month payment for the loan they've taken, but rather we wait until the farmer actually has the coffee to pay back. We do not require the farmer to pay us back in cash. However, the farmer can just make sure to deliver their coffee to our partners regularly as they have to, and our partners will deduct the amount for the loan before they pay the farmer. So in a way, yes, the loan is linked to the seasonal coffee delivery and the repayment as well, because it's a check-off process.
Yep, you want to answer the next one as well, since it's related?
Yes, in terms of, sorry, the next one is
the evidence on loyalty.
Oh, yes. So what we've seen is that because of the very easy repayment structure and the ease at which farmers get the loan on time when they need it, they do not actually sell their coffee to the quickest money lender because they need to pay school fees. So we've seen some of our partners actually get more coffee coming because farmers are attributing their loan size to the coffee they deliver. They know the more they deliver, the bigger their limit with us. So we'll see that first we have an increase in coffee delivery to our partner because they know they not only pay the loan with coffee, but that delivery also contributes to their upcoming limits. The second thing is that we see that they have no pressure to sell their coffee at farm gate before it's even ready or quality enough for them to get the premium price because the cash need is already catered for. So we've seen that with AgriEvolve, we've seen that with the farmers we've worked with in Central, we've seen that as well in the West. It's a trend that we've seen, aside from just the productivity, increase in productivity, we've seen the huge amount of increase coming from just us taking care of that cash need. Yeah, I don't know if I've asked.
Yeah, in terms of evidence, we are a data run company, so we have a lot of evidence. So yeah, as we shared earlier, what we see in terms of reversal of site selling, which is super difficult to measure, but we estimate it to be around 40% on the back of the loan. So that's quantity. And then as Lillian alluded to, there's a quality aspect as well. And Johnny also mentioned it, that right, finally farmers actually pick the cherries when they're ripe, as opposed to prematurely when they need the cash. As to your first question, yes, let's get concrete here. Typical loan value in coffee ranges from 100,000 shillings, which is more in the Rwenzori areas where loans can be quite small because they're really dealing with smallholder farmers. All the way up to in coffee, we have not seen loans actually go above 10 million, but we do do a lot of loans in the Masaka region for Robusta above 5 million. But typically the range for coffee is between 100K and 10 million. Typical tenor across our portfolio, it's about 4.3 months. Coffee is no different, interestingly enough, and the coffee range tends to be between 3 and 9 months. So what we actually do is the moment the farmer takes their loan for that season the first time, we have given them a range of options that we think the harvest should be ready in that area. And for some areas, that range can be quite big, so 4 or 5 months difference, whereas in other areas, the range is much more narrow, sort of 2 or 3 months to pick from. So they can pick their month, and by that time, they should have cleared their loan. Otherwise, they unfortunately start incurring late fees and other things that we do to make sure that they do clear their coffee loan. And in terms of cost, of course, super important. The coffee loans that we do are all priced between 3.25 and 4%. The range is not set in stone, but depends on a number of factors. First of all, the quality of your data. The moment we think your data is good enough, you will get a big range of options to choose from. And these options to choose from actually come down to 2 things. How large is the guarantee that you're giving us? And if your data is good, you can pick a guarantee as low as 25%, but that means that the interest rate will be slightly higher than when you give us a guarantee of 100%, but that is up to you. We have partners who are on a guarantee of 25%. We have coffee partners that have a guarantee of 100% and everything in between. But essentially, we don't mind taking the risk if your data is good. But the only thing we're asking is that you participate at least for 25%, because we are driving your volumes and we do need your support if something goes wrong, because your staff actually knows where these farmers are based, and we don't, because there is no address system to base on. And the second factor that determines pricing is the commission. This is Uganda. This is a commission country. We understand that commission has a role to play, so we have built in a small commission in all our loans, meaning that if your team or your agents or whoever works with you to buy the coffee from the farmers does a good job, we pay them a small commission, because that's simply how things work here. Some people find a small commission fine. Other people say, actually, we have a model in which they need to become independent. So then the commission goes up. Or for people who give quite a high guarantee, we sometimes build in quite a high commission for the actual coffee company themselves, so that, yes, right, if something goes wrong, the guarantee means that you have a payout, but if something goes right, the commission actually means that you as a company can earn on the back of our loans. But yeah, long story short, it's between 3.25 and 4%. And that is it. We don't charge any fees, no hidden costs, no nothing, which of course banks are a bit too well known for. So the interesting thing is, even though this sounds like it's much more expensive than a bank, let's say a loan of 3.5%, where a bank may offer you 2 or 2.5. If you actually look at all the upfront fees, bank account costs, you have it. And a farmer borrows, let's say, 5 million shillings for 5 months, they're actually better off with us on a percentage all-in basis than with a bank. Repayment success, yes, almost forgot that. Across our portfolio, our repayment rate is pretty good. It's in the high 80s, low 90% rate, with a default rate of just above 5%. But there are big differences between the value chains. Coffee, thankfully, is one of the better ones. We rarely have seen write-offs in coffee above 5%, but I must say that is often because we have insurance built in, and we have commissions built in, and we have maybe gotten rid of the less well-performing agents that may buy coffee from you. But yeah, the repayment success rate is pretty high. Maybe to segue into the question from Dick Robert. Actually, if you look across our entire portfolio, so all the value chains that we do, the interest rate range is actually much bigger. It ranges from 2.5%, which is our very lowest rate, which is actually in dairy, is for our best dairy partners. Because dairy, of course, you can have continuous repayments on a weekly or bi-weekly basis, which make loans more affordable, which unfortunately is not the case in coffee, right? Can't ask coffee farmers to pay us back weekly, all the way up to 4.5% for our most risky value chains and our more risky partners. But the average interest rate that we charge across the whole range on a weighted average is 3.1%. So yeah, we try to do what we can to price as low as possible, not because we're a super profitable company, no, but because we think it will make us a better company in the end, and make sure that we have a product that actually works for farmers as opposed to works against farmers.
Martin, I think Bram forgot your question yet again. Do you want to repeat it?
I
No,
need
it's
another
okay.
coffee.
It's okay. It's okay. You'll get another. I think we are. How many minutes do we have to go before we have what?
Well,
About 5 more
technically,
minutes?
we have 30 minutes to go.
Okay.
Yeah.
My question is then for was with the data that you collect, does it allow you information to analyze what the funds are used for and therefore provide interventions along those lines? That was my question.
Yes, we actually do collect information about why the farmer has taken a loan, and we have that information alongside many other data points on how the loans have been paid back and which loans are most taken. However, in terms of use of that data, we are actually still making sure we have enough data to actually run an advisory system over them. So we need a lot of data to make sure that we can actually use that effectively for advisory purposes.
Yep, concretely to that point, Martin, we collect both use of purpose, but we also actually can hard code restrict the use of a loan. So our system has the ability to either pay the money to the farmer or pay the money to the input supplier or pay the money straight to the school. We have done all of those. And what we can even do is, let's say if a farmer has 1 million shillings they can borrow, they'll be saying, you know what, half of the money you can use in cash just to make sure that you don't end up going to loan sharks. And the other half will be restricted to either fertilizer or school fees or what have you. And we disperse the money straight to those suppliers. We've done that all across the country. So we have experience with that as well. I think Robert is trying to be very funny. That 3% is obviously not per annum. The inflation in this country is officially 6%, which means we would give 3% for free. But of course, we all know that the actual inflation rate is much higher, let alone default rates, costs that people are making. So that is per month. Annualizing that to a yearly rate is possible, but not advisable, because we do not give 1-year loans. In fact, if we would be able to give 1-year loans to farmers, our rate would be lower, but we think that a loan product is only suitable for a very small segment of the farmers who actually have the discipline and the educational levels to handle a 1-year or a 2-year loan. If those are really big, let them go to the banks. Well and good, they're catered for. We are there for the majority of the farmers, that 80 to 90% that make up the bulk of all the value chains, including coffee. And for them, we feel a seasonal loan is the most suitable loan, so that that temptation where they know they should be deducting money themselves and ultimately bringing that to the bank, we take that away. Just, guys, seasonal loan, the moment you get to the harvest, money is deducted, it's cleared, all good, you're good to go, you can borrow again next year. I must be honest, 3% per year, that's unlikely ever to gonna happen, or if it happens, Uganda would be a very, very rich and very well-developed country, which hopefully will be a point in time that we'll all get to experience, but probably not in the coming 5 years or so.
I think we have 2 more minutes. We'd like people to get back to business. The Arabica season is rough on everyone. Prices have certainly bounced back. My question is, with the ongoing new bill that has been passed, does this affect your business in Uganda? The new bill that has been passed on finance, will it affect our working with you? How does this affect us working with you?
Yeah, I think the how is an excellent question, because nobody knows what's really going on or what's really going to happen. I think the whirlwind hasn't calmed down yet, and it's yet to be seen what really will be implemented when. For us, as I mentioned, our average rate is 3.1%. For those of you who haven't read this amazing looking one-pager, the cap is put at 2.8. So obviously we're really, really close to the cap. We cannot go under the cap just like that. The cost of money and the cost of doing business and the difficulty of doing these small loans will not allow it. But of course, there are ways to solve this via upfront fees. So for the core of our business, right, as we were joking, we could have been called e-cappuccino. We're really big in coffee and we're really big in milk. We know we can price this under the cap pretty easily. For some of the other high risk value chains where we're active, think tomatoes, think potatoes, or high risk parts of the country, particularly in certain parts in the north where business climate is really, really tough. Yeah, our pricing will become very intransparent to somehow get it under the cap, or we will simply stop doing business, which of course is a classic. When it comes to interest rate caps, they actually do not solve the real problem. They just shift the problem either into the informal zone, right? So we stop doing it as a formal lender and informal people start doing it. Or indeed, yeah, the price transparency goes down, knowing, yes, right, there's some really, really educated coffee farmers out there, but some of them definitely benefit from keeping things as simple as possible. And this interest rate cap will unfortunately mean that we will have to become more creative to do this in a sustainable way. So yeah, we don't think that the way this has presented is the best way forward, but we trust in the process and that hopefully things will be done in a way that does make sense. But for us as a company, we're that close to the cap that we know we can continue, but maybe indeed it will come at the price of full transparency.
Thank you very much. I don't know if there are any other questions. I would like to close the meeting now. Any other questions? No. Okay, I'd like to thank everybody from Emata. I would like to thank the Emata team for coming and sharing with us what their experience has been, allowing us to ask a few questions and talk with them. For those from the membership, thank you for making time today morning to come and which part of Uganda you are, either it's raining or not, for coming and listening to them. We think that they might provide the solution for you, not for everybody, but the solution is there. And we hope to have more of these ones where you can listen to people that are providing solutions. But Emata in particular, because as Johnny said, they're highly specialized, highly focused, and they really de-risk our businesses and allow us to focus on our core business, which is trading and procurement. This other side of financing farmers, we have burnt our fingers severally, both with our own money and also our bank's money and also our donor partners' money. So if there is a solution that seeks to help us and also help us streamline our systems a bit better, considering CS3D, that we know is also coming up in a few years. This is sort of in line with that, and showing that we are doing the best for our farmers along the coffee value chain. So thank you very much. I would like to close the meeting. Have an awesome day everybody. Thank you very much, Bram. And thank you very much, Lillian. Have a wonderful, wonderful day. And I think we can close the chat. And also, Meryl, thank you very much for doing back-end work. We don't see you, but we see you. Thank you.
Thank you. Thank you, Martin, for hosting us.
Cheers, everybody.
Thanks.
You can contact them for business if you're interested. Meryl's in the WhatsApp group. You can reach out to her. Thank you
That's
very
very
much.
true.
Cheers.
Right.
Bye, everyone.
Cheers.
Bye.